Welcome back all for another interview. In this one, we're going to be talking and learning about nickel, copper, and cobalt mining. We're here with Premium Nickel, another 3D portfolio company, and its CEO, Keith Morrison. Keith, please start by giving us a good overview of the company and your background and how you got in the space.
Yeah, hi Hector. Pleasure to meet you, and thanks for the invitation to be on your interview. I'm a co-founder and CEO of Premium Nickel. We're a Canadian TSX-V listed public company. We're focused on nickel, copper, cobalt, sulfide mines, finding them and developing them. These products, nickel, copper, cobalt, are critical to a number of major industries in the world, including stainless steel, aerospace, electrical conductivity, generating grids, and most recently, new demand coming from electrification, decarbonization, lithium-ion batteries, electric vehicles. So, I mean, these are now referred to as critical metals, critically important for modern economies to meet climate accord targets by reducing emissions, decarbonizing their economies by adopting more use of electric engines and reducing the dependency on gasoline or combustion engines.
Yeah, and obviously governments are heading that way as well, with all the carbon credits and things that are going around. So yeah, really good space to be in. You obviously you founded it. So when did 3D get involved? Were they there near the beginning? How's the relationship with them? Do they help with day-to-day activities? I know Sheldon comes out and travels around with you occasionally as well.
Yeah, Sheldon and 3D Capital were right there at the beginning. They actually recruited me and asked me, because of my background in this space, to give them a hand with due diligence on these specific assets in Botswana that became the focus of the company. Sheldon and some other investors were friends, had created a private company and were using it for project generation in the Southern African region. Another partner of Sheldon's, a guy named Arnold Brand, had qualified the company and identified some mines that were in liquidation in Botswana, big nickel, copper, cobalt mines that had been run by the Botswana government as a parastatal called BCL. The BCL had gone into effectively into liquidation after the smelter that refined all of the metal from these mines broke in 2015, 2016. And all the mines have been placed into care and maintenance at that time. Arnaud, with the support of Sheldon, had created this private company and engaged it in a process to start to evaluate the opportunity. I was brought in to help support that initiative. And again, because of my background, it was sort of I guess a natural thing that I would end up sort of taking over the technical leadership and the drive behind the process that went on for the next several years in terms of due diligence and negotiations with the court and the local government that allowed us to acquire ownership of the assets.
Yeah, and it's interesting. I didn't know the relationship with Arno, and obviously he's at 1 billion. Do you ever, I mean, is there ever times where you stumble across sites which, maybe a bit more rich in other minerals? It sounds as though on that end he was referring to pass on a lot to you because it was more in your field rather than in gold. So that,
Yeah, Arno and I, so we're all good friends. If we see something that would be beneficial to someone else, I think we're quite open. And also on a technology basis, if there's something we can do that would help or benefit, then we're obviously available. All good relationships and all very supportive.
Yeah, I think that's also shown that 3D is sort of family run. You're all close with 3D, and all the portfolio companies are close with each other as well. So that's really encouraging. I mean, you kind of answered it already. You were sort of talking about EV, but why Why nickel, copper, cobalt?
Yeah, I'll give a different answer to
Yeah.
that. You're right. The current thing is EV and stuff,
Mhm.
but in the natural resource space, nickel, copper, cobalt mines are the rarest mines to find.
Mhm.
You can find oil fields, you can find diamonds, you can
Mhm.
find copper mines, you can find zinc mines, you name it, you can find anything. Trying to find a nickel, copper, cobalt
Yeah.
sulfide mine, very difficult. And to find a big one, even more rare. So they tend to be extremely well known, well valued. Sudbury in Canada,
Mhm.
Norilsk in Russia. These are mines that are country building in terms of economic impact. They've been in
Yeah.
production for 100 years, created tens of thousands of jobs,
Mm.
hundreds of millions in economic benefit. So
Closely working with the government in a lot of areas then because of the size.
yeah, well, and fully valued when they transact.
Mhm.
There's when they come up for sale, there's maybe one a decade or two a
Mm.
decade.
Yeah.
So they tend to be highly prized assets.
That sort of nicely leads on to the sort of size of your land package. What are the projects being focused on? I saw on the website there was at least four.
Out of the liquidation in Botswana, we bought two separate assets. One I'd refer to as the Selibi Piquet nickel, copper, cobalt camp.
Mm.
So it's the mining license there. This is a permitted mine, which is very important. We don't have any permitting issues. The land position is about 120 square kilometers. The mineralized system is about 14 kilometers long. Within that mineralized system, there's 4 past producing ore bodies. It came with a large South African compliant mineral resource, two operating shafts, road, rail, power, 5,000 kilometers of underground infrastructure. So these are big mines. Like, think about that, 5,000 kilometers of tunnels. That's like Toronto to Vancouver, in
Yeah.
an underground tunnel. Like there's literally, significant billions invested in the infrastructure in these mines.
Mm, mm. Yeah, I don't think people appreciate it, and obviously when these releases come out, press releases come out, I think people struggle to digest the mining ones as much. But if they actually do the reading, they can see that these things are huge. And then actually you've touched on, I think you mentioned obviously liquidation and things in terms of how you acquired these mines. So they were often in distress, and then you've got them for it's been an absolute steal for you guys because you've acquired them at the right time, presumably.
When they went into liquidation, because they were past producing mines, they had a lot of liability associated with them
Mhm.
because they were built in the 1970s, pre really any environmental sensitivity. So part of the negotiation, two aspects of negotiation. One, nobody really knew how much ore was left in the ground.
Mhm.
Not enough drilling had been done. 14 kilometers of mineralized areas, 4 or 5 kilometers had no drilling in it. We always thought that it would be well mineralized, but
Mm.
we couldn't prove it. So
Yeah.
there was that issue, like how much is really left here? So how do you value it? That's difficult. And then the other aspect was, could we separate the mining licenses
Mhm.
from the liabilities? So the negotiations with the court and the government was to secure the mining rights, the permits, but to decouple them from the legacy processing, the smelter, the tailings dam, the slag heap, because all of that stuff carried with it significant environmental liabilities that
Mhm.
would be too big for a company of our size to take on. So that's where it took us about 3 years of due diligence and negotiations to reach a first transaction, which was completed in January 2022.
Yeah, yeah. So it sounds like there was many angles to those negotiations, and the fact that obviously there was still drilling to be done was a sort of investment on your guys' end. You mentioned two things there, obviously the drilling and sustainability. We'll touch on that first. What are your sustainability plans and how?
Yeah. Well, the good news in that we separated the mining licenses from the processing assets. So essentially we have, a big high grade remaining resource, but we'd have no processing assets.
Mhm.
So we can fully modernize the mining method, the beneficiation, adapting and committing to the highest standards of environmental responsibility, the highest levels of sustainability, change the business model, embed sustainability in it from day one.
Mm.
Like in the old days, this was a classic mining town. The mine owned everything. It owned houses, it owned the hospital, it owned schools, it owned roads. And so when the mine shut down unexpectedly in 2015, it laid off 5,000 employees in a town of 50,000. The economic impact of that,
Mm.
by any measure of sort of civil behavior, drug abuse, petty crime,
Mm.
domestic violence, mental wellness, the town went into a high level of stress. We now have the opportunity, and I would say the obligation to return, a second opportunity to this town through a better sustainable business model.
Yeah.
We're not going to own all that stuff. We're going to own the mines. We're going to pay our people well, and
Mhm.
those people can buy homes. They can build
Yeah.
hospitals. They can partner with entrepreneurs and other forms of investors to build the town
Mm.
while the mines are running. So the next time the mine shuts down, the local economy will be much more diversified and much more sustainable. And also the environmental impact of everything we're doing, we're aiming for a net zero carbon process. So again, we're adapting the best technologies that we can, solar energy replacing coal generated, power plants, etc.
Yeah, so basically those metrics are obviously net zero, but also the positive impact you'll have on the town, which is very, very important for I presume governments and districts in the area wanting their people to live well. What drilling and work has been done? Can you give us top line details on some of the results? There's been a huge number of press releases that I think have gone totally unnoticed. Tell us about the results at the Selibi mine in Botswana and your high extraction rates.
Yeah, thanks. Great question. I'll try not to get too long an answer.
Mm-hmm.
There was 4 mines at Selibi Pikway. We engaged an independent engineering firm, DRA, to conduct work called front-end studies or FES reports, helping us to prioritize where to start. You just can't start all 16 kilometers at once. You need to kind of pick and choose. So the Selibi North mine, which is accessed by what's called the number 4 shaft, became the area for us to prioritize. So we did a good equity financing with a Canadian value investor called EdgePoint last summer. And we used the proceeds from that financing to start an underground resource drilling program, which was in total aimed at around 32,000 meters, working within initially the existing SAMREC resource at Selibi North, and then expanding it using geophysical techniques and structural measurements to follow the ore body deeper. We're going to shut that resource drilling program down at the end of this month because I think we've got to a big enough number. It'll take us another 2 months after we draw a line. The ore body keeps going, but we have to just say, okay, from this drill hole on, that's where we're going to include in our first 43-101 compliant report, which is referred to a mineral resource estimate or an MRE. So between the MRE will happen 3 or 4 weeks after the assays are received from that last drill hole. So if we shut down at the end of March, typical assays are 6 to 8 weeks. So the last assay will come in late May. A few weeks after that, we should have that first compliant resource. And we believe that MRE will be a significant mine life using the existing shafts. So existing shafts can lift 1.3 million tons per year. We know that. So we're trying to optimize the life of those assets, not have too little ore, not have too much ore, kind of just have a sweet spot that provides a good incentive for that starter ore body to move forward through 43-101 So you go, I don't think we may do a PEA or preliminary economic assessment. We may not need to, but the goal would be to have a pre-feasibility or PFS by the end of the year or early in Q1 2025.
Wow. Very, very encouraging. I mean, when you were talking about number 4 shaft or whatever, is that because that was just where, you were doing all the geophysics and you could see clearly that this was, without even looking in too many places, this was where to look first. And now you're making the decision to start drilling because you just know, there's a lot there and it'll be a bonus, whatever you find on top of that.
That would be part of it. And this is going to sound a little, I'm not trying not to be facetious, but the geophysics has been so successful in showing us where all the high-grade mineralization is. There's kind of high-grade mineralization everywhere. We just are picking the stuff that's close enough to a shaft that it can be brought back into production with the lowest capex and the fastest timetable. So the stuff that's proximal to, like, there's actually ore within the workings at Selibi North. You walk around underground, you can look at massive sulfides that are already drilled for blasting. It was an active mine that just got shut down suddenly. So, we can be back in production. We could be mining now. We just don't have a processing plant.
What caused some of these, mines to just shut unexpectedly? Because it seems as though all the resources are there to get going, and that's obviously great for you guys. What are some of the causes that might make previous people to just sort of leave and ditch the equipment?
Well, it was really one cause. It was that their smelter broke. So all these mines used to take ore and take it to one smelter to produce a product for international shipping and sale beneficiated. When that smelter broke in 2016, they invested $100 million trying to restart it, but it wouldn't go again.
Wow.
that set all the mines into a crisis where they ended up under care and maintenance. And then we got involved in 2019 with Sheldon and Arnaud, identified that, we believe that the remaining resources were big enough to support a restart using modern technology, zero carbon footprint. You didn't need a smelter. You had other ways of beneficiation. So we've, that's the business model we're following.
That's brilliant. So that means your overheads and margins are even better than theirs because they're not, you're not spending 100 million on a smelter, which is quite amusing, but good for you guys.
Yeah. Imagine I'm being facetious with you here. Like, what would you have in your life that was made in the 1960s or 1970s that somebody hasn't made better over the last 50 or 60 years? Like, that's pre-digital, kind of everything. And literally, that's when these mines were built. So the fact that we can modernize virtually everything in the mining methods, power distribution, safety, efficiencies, electric versus diesel, better metallurgy, just there's nothing that you can look at in the mining process that will not benefit from 50 or 60 years of technical modernization. So yeah, you're right, it'll be safer, more efficient, and more profitable.
And I guess before then, would you say that it was the government's fault for not sorting or modernizing the tech with who was there previously, or what was the reasoning from their point of view?
I think I'm trying to be diplomatic here. So governments have a lot of benefits and good things that they do for their people. I don't think governments should really be running mines. I wouldn't want the Canadian government to run a mine. So I think they took on something that they didn't really understand, and they didn't understand the need for the amount of care and maintenance expenditures and modernization that they needed to make. There was always some other use for money that was more current and needy and immediate benefit from a government's agenda than maintaining a smelter or doing a whole bunch of exploration drilling, or the things that you would do to really maximize the value of the mine or de-risk the mine. Governments have other agendas competing for capital, and it's just not fair. Like the two things should not, those decision makers shouldn't be facing that.
No, exactly. There's too many things to do. But that opens up opportunities and deals for others like yourself who have the expertise. So you were talking about when that mining was going to start. I mean, is it towards the end of this year? You said 2025, start of 2025.
No, we'll have our PFS, or our really first economic model for investors to look at. We would use that to secure the capital to start construction. There's probably 2 years of construction, so production should be in 2027.
Sure. And then I guess, is there any comparables to premium nickel? I'm not sure there is. I mean, I only saw, I think maybe only one other nickel company when I was doing a bit of research prior to this interview in
Yeah, well, that goes back to our point at the beginning, why look for nickel deposits, because they're really rare. So it's hard to find comparables. From a current point of view, I would say Lifezone, which owns the Kabanga deposit in Tanzania, probably will be a similar size, similar grade, different political risk, different point of development. They're not permanent. They don't have infrastructure. But probably the closest thing in the world that would be in the same conversation. From a legacy point of view, to help understand transactional value, I would suggest people look at the Independence Group purchase of Sirius Resources in 2015. Sirius Resources then was about a 12 million ton, 3% nickel equivalent, no permitting, no infrastructure, $5 nickel price. It was a $1.8 billion Canadian transaction. So I think that's a good comparison to what our first ore body will be like.
Yeah, well, that was going to be my next question, but you've answered it. I mean, trying to do projections might be harder without having any competitors, but there's been evidence, you know, to show you that, you know, obviously you've got a really good model and business ahead of you. And then very lastly, what are the short-term to medium catalysts for premium nickel? Obviously, we've got the drilling and the end of this year, beginning of next as well.
So there's going to be a continuum of for the next 2 to 3 months, every 2 weeks, more resource drilling. As you said earlier, you know, those results have been spectacular. And as the market starts to realize they're not one-offs, that this is the character of the ore body, and then that will lead up to the first mineral resource estimate in June, and that will be a quantitative number of how big this resource is and the grade distribution. I think that will be a big catalyst or driver in terms of awareness. Then we start into PFS by the end of the year, and PFS is a major de-risking in terms of economics of the first development of the starter ore body. Like, again, I believe this MRE will be material, but it's actually only a small fraction of what's at Selibi Piquet, and has nothing to do with Selkirk. So when people start to realize, wow, you know, the first ore body these guys are putting up is material, it's big, it's world-class, can be back in production in 2027, low CapEx, low OpEx.
Exactly.
They've got, and that's the tip of the iceberg. They'll figure it out.
Yeah, I think when people realize there's no alternatives, and you're a listed company with all this potential, and you've got the land package and the rights to this, I think it's going to be very interesting to see how it progresses from there. And I don't know many people who have investments in nickel, but I can see that, you know, with all the applications we talked about earlier, it's going to be a big one. And I thank you very much for coming on, and really hope to see you on soon again, because it seems like there's going to be a lot more press releases coming out.
Yeah, no, thank you, Hector, and apologize for the voice and the cold. Hopefully next time I'll be in better health.
No worries. Speak again soon. Cheers.
All right, yeah, take care.